You're looking at a daily chart of the Nasdaq. Welcome to my daily review. The index fell 112 points today, and it's just giving back some gains, but it closed right there at its 10 EMA, and it's just a tick above it. Yeah, 0.2% and 1.4% above the 21. So if it pulled back to there, that's fine. It's had a nice run since March 13th. You know, it has run. There you go, March 13th up to June 16th, 13,864 from 10,982. So that is a heck of a run, and it needs to digest these gains. You know, you could blame, higher rates, the 10-year, whatever, but this market needs to cool off a little bit and just digest these gains. And if it just trades sideways like that for a little while, hey, that's okay. Let it pull back to the 21, it's not going to hurt. You can see on the weekly here, massive run. And now it's just the last 4 weeks, up a week, down a week, up a week, down a week, and just going sideways. And so that's okay. The Russell was hit a little harder today. This is more of the risk on index because of the smaller cap, but it sliced its 21. There you can see in heavy volume. And this has, a huge component of those banks that are rate sensitive, small regional banks. So I think 17% of the index has those small exposure to those small banks. So anyway, I don't trade indexes, I trade stocks. And the leading stocks, I'm just going to review them here for a little bit. SMCI, this one had a big run, 93 to 270 in a very short period of time. It looks like a high tide flag, and it's just flagging now. You can see here's your pole, and then here's your flag, and it's just going to take some time here between, I don't know, 220 and 250 it looks like. And they have earnings not until August 16th, so you got over a month to wait for any data points from them, but it's doing nothing wrong. It pulled back to the 21 after this big run. It pulled back to the 21 and just marking time, doing well. But the big key driver of this rally is the earnings report from NVDA, and this was a game changer because I think it caught people by surprise. Their revenue guidance from 11 billion from 7 billion, it tells you that corporations are spending money on AI. There's an arms race here, and Larry Ellison said they're spending billions on NVIDIA and AMD chips. And if you want to keep up with Oracle and Larry Ellison, other companies are going to have to spend billions too. And these companies are competitive. They don't want to get left behind. And NVIDIA is going to be one of these stocks that are going to be the beneficiary of this AI revolution, which at first I was a little doubtful, but now there's no doubt companies are spending money, and it's going to result in, powerful earnings and revenue growth for, many companies. Of course, there's going to be winners and losers, but NVIDIA is definitely one of the winners. Also, Tesla. This one, they reported deliveries on over the weekend, came out Monday and ramped, and then pulled back just slightly today, 2%. But for the week, you can see it's up, nearly 6%. So Tesla is looking strong. Another one of the leading stocks is ELF. It's just surfing here on its moving averages. It's got, the tremendous sales and growth, and I don't think it's going to be affected by any recession. I don't see any recession anyway. Looking at the manufacturing numbers and the jobs numbers, and it's I don't know. I just don't see ELF being hit by as showing a slowing consumer. But anyway, there's got to be a narrative for everything out there. Celsius, again, this thing, I was hoping it would close in a 3 weeks tight pattern this week, and it might, because let me see, 2 weeks ago it closed at, I think, 150 and change, I believe. Let me zero in here on Celsius. 150 and a dime. Last week was 149.19, so if it just closed about 148 and change, we could have our 3 weeks tight scenario. And yeah, we'll see what happens with Celsius tomorrow, but it'll still be probably a 3 weeks tight in spirit. Let's just call it that. Some stocks on our watch list that are performing well. This is a DigitalOcean. Today they purchased a company. Whoa, they closed over 45. Good job. They purchased Paperspace, and they also reiterated forward guidance. So that's a good thing, that there's not going to be any surprises at earnings time. They report earnings August 3rd, it looks like. And anyway, that's a 13% move on 225% above average daily volume, and that is not to be ignored. So DigitalOcean, congrats to the longs there. I know some people here have DigitalOcean, so congrats. I did not. I did at one time, but then I sold it. So I do not hold that stock. This is Fortinet. Once again, this nice 18-month consolidation. You can see the RS line pointing higher, as this thing is in an 18-month consolidation, pulled back to the 21, which is a theme with these software names, and found support and was up 0.5% today. So good for DigitalOcean. Unity Software is another one on our watch list, and it pulled back, didn't even make it to the 21, which is 39 and a quarter. So yeah, didn't even make it there. Maybe tomorrow pull back to the 21, see if it finds support. Frog is another one on our watch list, just pulled back to its 21 today. And you can see these software names, even the exchange traded fund IAGV, it pulled back to its 21. So this is a basket of software names pulling back in lighter volume to the 21. So I'm expecting, rotation out of housing and perhaps maybe into software. I'm going to keep an eye on that. Speaking of which, the home builder stocks, they're seeing some profit taking here as we enter the second half of 2023, the third quarter here now. We saw window dressing last week, and now this week we see actual profit taking here. And there's a lot of profits to be had with these home builder stocks. Meritage is another one, seeing some profit taking, slicing its 21. Well, there's a lot of profits to be had here. So where are you going to take the profits? Where you have them. This is DR Horton, sliced the 21. In Builder, we saw some profit taking in this leader as well. Still above the 21. Nice hit today, though, 4%. So, we just got to guess where they might be going. They might go into the airlines. We just got to watch now. When markets sell off like this, you watch your leading stocks. How do they behave? Where are they finding support? When do the buyers step in? So you're just observing the fish tank now. United Airlines, obviously, this is a nice little setup here. Pull back to its 10 EMA, and perhaps we get some rotation into the airlines. This is a DAL. This one's had a nice move, as you can see. But still, it's got this big base, and now the rip. You can see the RS line showing strength. So what's the other one that I like? Alaska is on our watch list here, too. It has this cup with handle pattern, just pulled back a little bit today. So maybe the rotation comes out of the home builders and into the airlines. We'll just have to wait and see. I am going to make a video this weekend. We've had quite a few IPOs, and I wanted to get some of the IPOs. This is KVUE, a Johnson & Johnson spinoff. You can see that the low of its initial IPO day was $25.25. It undercut that, which is normal. And it's just, forming its IPO base. This has a 49 billion market cap. Like I say, it's a spinoff from Johnson & Johnson, and not a small IPO at all. CAVA is a retail restaurant stock. I've never eaten at the restaurant. They have 263 restaurants across 22 states. I have not been to one, but this one also undercut its IPO low, which was $40. Yeah, and it came back, and you can see today it's $39.20. But it just launched, a couple of weeks ago, June 15th. So I want to keep an eye on. It's really nice that these companies feel the market's healthy now, and they can bring stocks to market, fresh merchandise. This is NXT. Its low is 28.51. It undercut it here, 28.24, and has done really well. So the solar IPO. Anyway, I'm going to make a video this weekend of a handful of IPOs that I like for my weekend report. I wanted to get to a couple things here, a couple of terms that I use, and people get offended by them, and I don't mean to offend anyone. I just, one of the terms is weak hands. I use the term weak hands, and because you see in stocks, when they sell off, this is SMCI, by the way, and how, the last year I was trading this one around the 50 area, the 70, and I got shaken out a couple of times. Because it always pulls back before it moves higher. And, every time, it pulls back below the 50, and I'm going to sell when it pulls back below the 50, then it ramps higher. Here again, pulls back, ramps higher, pulls back, ramps higher, and that's what it does. So that's the pattern here with this stock. Even with this big move, you know, after earnings, it pulled back to the 10. Then this is the NVDA report. It just ramped up to 270, once again pulled back. So weak hands refers to your position. It doesn't mean that, you know, I'm calling you weak person, or it's nothing about your character. You know, you could bench press 500 pounds and still have a weak entry. So if I enter here at 90, I can withstand this pullback. You know, I'm holding at 90 to 270. I've got, you know, big gains. Woohoo! You know, I've got a, you know, 3-bagger. And if you buy here at 250, you're a weak hand because you have to sell when it pulls back here to 213, which it did when it pulled back to its 21. So you have to sell, you're a weak hand. So what happens is the weak hands sell their stock to the strong hands, and the strong hands suck up this supply, and then it runs up higher, and it just rinse and repeat. It keeps doing it over and over again with this stock. And, you know, at some point, you know, it's going to just top out, and I'm not going to say crash, but it'll just top out and won't appreciate anymore. But the term weak hands is nothing offensive, folks. It just means it refers to your entry point. The lower you entered, if you entered back here at 37, I mean, you could just sleep well, knowing that if it comes down, you know, today it was down 1%, big deal. You know, you could sleep well. But if you bought up here at 250, you know, the higher you buy, the greater your risk. And so you don't have any tolerance for any pullbacks when you buy up here at 250. So that's just the weak hands. The other one is I use house money. It's a term that, you know, it's always your money. It's never house money. Even if you bought it, you know, 90, you bought 1,000 shares at 90,000 bucks and it ran to 270, you had 270,000 bucks. Now it's down to 250. Well, you just lost 20,000. You don't want to lose 20,000. That's not house money. That's your money. You had 270 at this point. Now you have 250 at this point. Okay. So it's never house money. It's always your money. So take care of your capital, preserve it. And I'm going to get off my soapbox, and we never give up.